It's time for another Targets in Focus, which today is with Dr. Valentin Hofstätter from Raiffeisen Bank in Austria. As head of currency research, Dr. Hofstätter specialises in the majors, but Raiffeisen are also experts on Central and Eastern European currencies. Thank you very much for talking, especially to Dukascopy TV, Dr. Hofstätter. Let's start with the dollar-yen. There was some speculation ahead of the G20 meeting that the BOJ might attempt to set a floor on the pair. Do you think they still might intervene, and where do you see the pair heading at the end of Q4 and the next two quarters?
So I would not expect a hard floor as the Swiss National Bank has been doing recently. I think Japanese national bankers are not adventurous enough for that. I think they're too conservative to do something like that. But basically, if you look also at the chart, we have already a floor more or less at 76 something, and I would expect this to hold. So although we, for instance, think that risky assets will again weaken over the next weeks, which would basically have also effect on many foreign exchange rates. Also on the dollar-yen, you would usually expect the dollar to strengthen in this case, if stock markets go down, for instance, etc. I would not expect that we see levels below the 76 more than on an intraday short-term spike to the downside. So we expect the level of 76 actually to hold.
On to the euro-dollar now. Last month you predicted more market pressure on politicians to solve the eurozone debt crisis. Do you see positives on the horizon for the crisis, and where do you see this pair heading?
I think they will make progress, for instance, also already on the coming summit this weekend, but not so much progress as had already been priced in euro-dollar some days ago. Put differently, this rise from low 30s to up to 39 almost on Friday evening was already very much anticipation that in the coming summit there will be the big deal concerning Greece and bank realization and all these things that haunt the Eurozone. Yesterday already Germany poured cold water on this, actually saying don't expect too much, and that's exactly what we are also thinking and have been writing also recent days, that expectations are already much too high as far as the summit is concerned. Put differently, 38, 39, this already more or less prices in a pretty fast solution of the debt crisis in Eurozone. So we still have a very strong opinion that euro-dollar is headed lower towards the 130. We were pretty close already 2 weeks ago, and we think we're heading to this territory again now.
Days after we last spoke, the SNB set the floor on the Euro-Swissy. Do you think there'll be much change in this pair from around that 120 level?
So far for the next quarters even, I think, unless the Eurozone unravels completely, the SNB has enough firepower to defend the 120, and they certainly want to do this for the time being. So we do not think that the 120 are endangered over the next 6 to 9 months. On the other hand, it's difficult to see much upside if we are correct in anticipating more disappointment from the Eurozone as far as the fast progress in the euro debt crisis is concerned, that we will have disappointments, then this should also cap the upside for Euro-Swiss. So we are currently even trading at above 123, also the last trading days. I even don't think that this level will hold. I think we will retest 120 over the next weeks with more disappointment from the Eurozone.
Finally, we've talked a lot today about intervention. There is talk that in Poland the NBP will intervene in the zloty. Raiffeisen are experts on CE currencies. Do you think they will, and will it have much of an impact?
Actually, I think we are moving to this point, as we would expect Euro-Poland in the short term, and we are currently at 437 roughly. Already had been above 450 before we had this rally in risky assets for the last 2 weeks, which brought down to below 430. Now already moving back up the last 2 days. As usually, Euro-Poland is simply a mirror image of what's happening with risky assets on a global scale. So the stock markets weaken, the Polish zloty does as well, and vice versa. As we are in the short term rather negative on risky assets, we think the relief rally of the last 2 weeks has been too much too fast. As I said, more disappointment from the Eurozone, blah, blah. It would be quite natural consequence that also Euro-Poland tests the 450 again, and in spikes is even above this level, moving therefore to a level where intervention from the central bank is becoming more and more realistic. Therefore, in the short term, we would not be too optimistic on a Polish zloty investment, although we like the currency very much in the longer term. It's one of the structurally, fundamentally strongest economies in CE.
That's all we have time for today, but stay tuned to Dukascopy TV for more Targets in Focus. Goodbye.